when the economy is doing terribly, your mortgage rates will drop. It's a good thing for mortgage rates, but it's not good for the rest of Canada.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren. Hello and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson. I'm joined as always by David Warren, and we're here to bring you the latest and greatest Canadian real estate. We're back from our break. It's fall. It's September. Kids are in school. It's the most wonderful time of the year, as they say. We were just talking about before we came on air that it feels like this is kind of like the new year for real estate. It's like everyone's back in a routine. Everyone's back. You know, they're back. We're back.
We're back. They're back.
Yeah.
They're gone. They're in school. Out of our hair.
Yeah. Dave and I are both level 2 mortgage agents. If you ever have questions about mortgages, pre-approvals, refinancing, renewals, give us a call. We're here to help. Dave's also the owner at Referral Mortgages. And we want to give a quick shout out to our amazing sponsors, Guertin Poirier Avocat Lawyers in Beechwood, Centum, and Big Insurance in Westboro. David, how are you doing? How was your vacation? How was the getaway?
I'm doing great. Yeah, we were away. Well, first and foremost, I had my son start kindergarten today, new school. So that was interesting.
Mm-hmm.
You know, you never know how that's going to go. And surprisingly went reasonably well. But yeah, so that was a big change in our household, walking to school. Luckily, it's like a 15-minute walk away or 12-minute walk away from the house, which is nice. But yeah, we were out east. We went to Halifax for 4 nights and then PI for 6. And yeah, it was great. I went to university out in Fredericton, so I hadn't been out east. And at least a PI in Halifax been, I think, 17 years. So been quite a while. And so it was good to see a couple of old university buddies and get some time. It was nice and quiet on the email front and from the work front. It wasn't overloaded. It was a nice quiet lull as everyone, I think, was probably in the same boat of like, like daycare and preschool out for that 2 weeks. That seemed like everyone was dealing with that. So it was a perfect time to get away.
Yeah, we funny you say that. I was just at I went to get coffee this morning, ran into a chamber meeting that I had actually overlooked, forgot it. Well, it was in my calendar, but I just went to get coffee and I was like, oh, hey, everyone's here. So I started chatting and saying that my youngest is actually starting grade 9 because someone their kid was starting kindergarten as well. And so I pulled up this photo. This is Madden, first day of kindergarten, 4 years old, 2015. So that's how long it's been since I had someone in kindergarten. So I feel you. But wild to think that Madden is going into grade 9. Hey, my youngest is going into high school. So there you go. Wild. Time flies. Enjoy it. Enjoy it because it feels like yesterday.
We're the same age, but we started different times.
Yeah, exactly. So lots has happened. We took kind of a 2-week little hiatus to enjoy the last few days of summer. And there's been a lot going on. Not so much. I feel like the market has been, as you said, it's kind of been the calm before the storm. We always expect this. Last 2 weeks of August are always slower kind of purchases coming in. But again, if you're a buyer, like it's been a really good time to be out there because prices have been kind of stagnating a bit, at least currently. Don't know what's going to happen going into the fall. We got a Bank of Canada announcement coming up in just under 2 weeks, or just over 2 weeks, excuse me. And lots happening with the tariffs, trade wars, etc. So what are you seeing, Dave? Like, what are kind of the highlights that you're seeing currently in the market?
Yeah, I mean, I guess really a couple things on that front is, last week we had some figures come out for Canada and the US. Really with regards to Canada, we had a contraction for the 3rd straight month in our GDP, and we contracted to an annualized rate of 1.6 in Q2, with June marking the 3rd straight month of a decline of 0.1%. A lot of that is as a result of kind of the trade war, that kind of rippling through. There has been kind of an update with the Bank of Canada. It has increased as far as the odds of what the market is predicting for a Bank of Canada September 17th rate drop. So their overnight lending rate is it's ticked up to 48%. So it's basically a coin flip right now. Mm-hmm. However, we do have the jobs numbers coming out this week on September 5th and inflation data coming out, the Canadian inflation data coming out September 16th. And then the rate announcement from the Bank of Canada September 17th. So I think that will be obviously the jobs numbers this week will be interesting. But and kind of watching though that what the U.S. does, because the U.S. They're about, according to at least most of the economists out there, basically a September rate cut in the U.S. Feds is at 90%.
Yeah, super high.
So yeah, I mean, that's virtually a guarantee. So it'll be interesting to see if the U.S. dropping a quarter point, if that also is a kind of forces the hands of the Bank of Canada to drop as well. But we do have that stickiness of core inflation and things like that. So, but we have like you kind of alluded to, that tariff stuff still ongoing. We've dropped, like you said, we've dropped the Canadian tariffs on U.S. goods. They have not dropped on us, and we still have China still has tariffs on to Canada. So how that changes things, with that drop of the tariffs on U.S. goods, which I think was now a week and a half ago, roughly. Who knows? It's ridiculous that we're still talking about tariffs at this point when there was that August 1st deadline and then another one, and it's moving everything. But we'll kind of see over the next few days.
Moves. Like the U.S. is really like the kingpin between U.S. and China. I mean, they govern most of the global economy, between those two countries, at least the majority of it. And now with all the microchips and nuclear power plants that are needed to run the AI and the nickel and all these things that need to be imported and exported from different countries, these tariffs are so prominent across the board. I think the European trade got kind of the best deal, as far as I understand. You probably understand that better than me, but I think we're kind of getting the short end of the stick here, unfortunately. But there was an article here that I was reading actually in Global this morning. It says Canada has officially ended most of its counter tariffs on U.S. goods, a move tied to provisions under the CUSMA, the CUSMA, the Canada United States Mexico Agreement. These tariffs were originally imposed in retaliation for American trade restrictions and had been inflating costs on everyday products. With the removal, consumers can expect some relief, particularly on grocery staples like orange juice and other imported items. Though it may take some time for price drops to trickle down to store shelves, business groups welcomed the decision, arguing that lifting tariffs helps ease pressure on supply chains and lowers costs for Canadian households. However, not all tariffs were lifted. Those on U.S. steel, aluminum, and autos remain in place. Labor groups criticized the move, warning that removing protections could harm Canadian workers in certain industries and weaken Canada's negotiating power in future trade disputes. For the housing and real estate sector, these shifts could indirectly influence construction costs, consumer spending power, and overall affordability trends. So, question for you, Dave. With construction materials, especially like steel, still being under tariffs, how is this going to play into new housing development costs and just the overall price of homes? Because we know, obviously, we have a lot of wood in Canada, a lot of lumber, but aluminum is something and steel is something that we do have to import. So, this is going to obviously keep things a bit more expensive, right?
Yeah, I mean, we do have quite a large steel industry in Canada. Hamilton, especially, is that's the predominant. That's their predominant industry. I think the last episode it was that we were talking about it, and there's no way that this isn't a reason for a lot of these developments to be paused. As far as new housing builds and condo builds, demand aside, because obviously we are seeing still a lot of product on the market, especially in places like Toronto. But I think really with these tariffs, as long as they're in place, I don't see developers really rushing to build because they need, especially for those high rises, they need steel and aluminum for those builds, steel especially. So that increased those tariffs being in place. Tariffs are really an additional cost to your own people. It's us that are paying those tariffs. It's not the other way. It's not the Americans paying it. So it is making it more costly, but it is also then there's the other flip side to it, which is nice, is that some of these other companies from sourcing materials are now looking and investigating purchasing locally, which is great for Canada and stop being so reliant on others. But there's only so much that we can that we can buy within our own country, that we're going to have to rely, obviously, and will continue to rely on, just like most other countries in the world rely on the US for um, a lot of goods and for them to purchase a lot. So it's got to have a continued ripple effect in the housing market, in development costs. There's just no way it can't.
Yeah, and something else that I don't think is talked about enough, and not to get too political, I'll try to keep it down the middle, but the government spending has a massive impact on our cost of living, the cost of goods, everything, right? Like if we're collecting taxes, but those taxes are going to things that aren't benefiting kind of our own economy, everything's kind of staying within Canada, then our costs are inevitably going to go up because if you keep printing money, the value of our money decreases, which means that you need more of it to buy the things you need. Like right now, I think in Toronto, it was like 11 times the median income is the average home price. And I think it should be around like 3 or 4. Like just like the cost of everything is so much higher because our dollar doesn't have the same value it did because of potentially how we're spending it. So I think there needs to be a bit more focus on how that money is being spent, that's being collected from our taxes and so on, so that we can ensure that our cost of living in Canada are reasonable and that affordability is kind of returned, because it's kind of off the charts right now, for everyone.
Mm-hmm.
Like
For
100K
sure.
today in a salary is not what it was 5-10 years ago. Like that was kind of always the target. Like people felt like, oh, if you make a 6-figure income as a household, you're going to be okay. Now it's like,
Mm-hmm.
you need like, 8 to 9 times that to get the average home in Toronto, which is wild.
Yeah. Yeah. No, for sure. I mean, kind of talking about the economy and kind of how these tariffs impact things. I mean, the Canadian economy shrank by 1.6% annualized in the second quarter, and that's its steepest drop since the pandemic. And predominantly driven by like exports kind of plunging. So autos and manufacturing goods were hit the most, along with a 10% decline in business investments. So that's a pretty big hit, for where we're seeing like a 27% drop in exports, and also the steepest decline in our GDP and economy since the pandemic. Like, I know the pandemic, we're not far out from it, but still it feels like a heck of a lot longer away than it actually is. But that's those are huge indicators of massive problems on the kind of coming, and that we're going through right now. We've had a resilient domestic, still domestically we have a pretty resilient economy, for the most part, but we're now starting to see those cracks. So it'll be kind of, as that continues and this trade nonsense continues, how that's going to continue to impact the economy. It's kind of one of those, though, and I've said it before, and you'll hear from others, is when the economy is doing terribly, your mortgage rates will drop. It's a good thing for mortgage rates, but it's not good for the rest of Canada. So if we continue on this path of contraction, continuous contraction of the economy, putting us into an official recession, the Bank of Canada will have their hand will be forced for dropping bank prime dramatically, and thus as well variable rates, and we'll start seeing the bond market come down. We saw a spike in it last episode, kind of that 10 days leading up to our last episode. We saw the bond market jumping up, but now we've above 3%. But now we've seen it kind of contract and come down a bit. We haven't seen mortgage rates really kind of follow suit yet, but I feel like as long as they continue, that the bonds continue kind of being pressured down below 3%, we'll see the fixed rates come down as well. But really we kind of stay on this trend of a contracting economy. We're going to start seeing the Bank of Canada have to make drastic changes.
Yeah, so kind of bringing it all full circle, like do you think global trade risks will eventually seep into real estate, or is housing fairly insulated by domestic demand here in Canada?
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Galtain Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
I think it has to seep in. Yes, there is kind of this outlier of increased supply, like I mentioned right now, of especially in Toronto and Vancouver and things like that. But there still is a high need, and you look at any statistic from any of the reporting agencies, any of the economists of where our housing demand is. When you're with the increased costs to build and builders stalling, even stalling a year kind of creates that ripple effect for real estate kind of being driven up. So I don't think we're like insulated, domestically by any means. The world is everyone are global trading partners. And when the costs increase in all of the materials needed, it will increase the cost of building, thus the purchase prices, and thus kind of, again, more costly to consumers. And that, like you're talking about before, about income to purchase price, that's just going to will get worse. So hopefully, again, we kind of say it every single time, hopefully they improve things and things kind of get straightened out so that, this doesn't become an even more drawn out thing, which then is, again, crippling our economy and dragging in the real estate market down with it and raising costs for, overall for Canadians.
Yeah. And I'm interested to see where this lands with regards to home prices. I was on X yesterday, and one of the kind of accounts that I follow, Daniel Folk, who I've mentioned on the show before, he had a chart that showed basically a significant drop in home prices. There was actually data from the Federal Reserve in the US, but Canadian data. Like, it was basically, he was saying that they have better statistics on Canada than we do for ourselves. But the chart was basically showing kind of it shows basically in like 1976 to 1984, there was an 8-year drop of 22%. And then 1989 to 1998, over that 9-year frame, there was a 21% drop in values. In 2008, 2009, when we had the big kind of market real estate bubble in the US, prices dropped within that first year by 10%. And then 2017, I think when they brought in the stress test and all that jazz, there was a very slight dip that first year. But then from 2022 till now, from the peak of when prices were kind of mid-COVID, this is across Canada, prices are down 23.5%. So more so than any of those other dips in the past. I'm interested to see like where that lands, like how low. I mean, we don't really see it, to be honest, in Ottawa. Like, prices have come down. I think last year was like 11% from the peak or something. And that was like the worst year we'd had in decades, if ever. But this year, I think they were up 4% or something. So like, I don't think we feel it here in Ottawa, or at least in the Ottawa and surrounding areas. But places like Toronto, Vancouver, Montreal, like, I think they're seeing that impact more. And I'm wondering, like, in your opinion, especially with all this uncertainty, like, where do you think that bottom is? Like, we always say it's a good time to buy, because right now, especially if you're a buyer, like, if homes are down 24% in your area, probably a good time to buy. Like, I don't think they're going to stay trending that way, but like, where is that bottom? Knowing that you can never get it right at the bottom, but like, what is going to be the kind of resistance level that's going to push it back up?
From like a hard dollar amount, I don't know what that number is, and I'd be lying if I said I did. I think at the end of the day,
what do you think would change?
Yeah,
what's going to change?
I think at the end of the day, like, we've talked about it so much in the past. Really, at the end of the day, for people and the general public, buy when it's the right time for you to buy. Like, trying to time the market in anything, like whether it's the equities market, whether it's the real estate market, to wait for that bottom out, like, you're always just going to be chasing that. If you're in a sound financial position from an employment standpoint, from a savings perspective, and you are looking to buy or you're looking to get into real estate, that's when is a good time to buy. You're looking at it for the long term, looking at that 5 and 10 year plan of staying in that home or longer, and not looking at it of just like this one point in time and trying to time it for that purchase price, because you'll never be able to time it properly. You might get that golden goose and the golden egg and buy, and yes, maybe buy it that one property on the at the absolute lowest dip, but the likelihood of that is pretty slim to none. Buy when is the right time for you with that future vision of like, I'm holding this and I'm staying here for a long time, and it, like, in Canada at least, historically property values go up, principal is being paid down, you're not paying rent anymore, or you're not living in your parents' basement, whatever it may be. And that's when is the right time, in my opinion.
Yeah, and I don't know this is what I kind of see too, is most of the people that are the most, like, the biggest speculators are usually the first-time home buyers, because they want to get in at the right time. They don't want to make a mistake. They're kind of, I don't want to say they're overthinking it, but there might be other factors involved as to why they're not buying yet. And that might just be kind of one of the things on the list of like, well, we think prices may still come down, right? So we're going to wait. So unless you're a real estate investor and you're actually speculating the market, as you said, like, if it's the right time to buy. If it's not, then wait. But I guess I was more so thinking, like, of all the things we've talked about, like the trade wars, the tariffs, the rates going down, like, I just wonder what is going to be that turning point where the sentiment of the market is like, okay, this is now, like, it now makes sense to start buying at these prices again, because I think there are a lot of people that are kind of waiting, seeing, like, when you see it keep trending down, you're kind of in a position where you're like, I'm going to wait, and then it might be too late, because then it's the same thing. Prices go up. You're like, oh, I'm going to wait to sell. It's never going to stop going up, It's like, and then it starts going down. You're like, shoot, I should have sold a year ago,
We thought a year and a half ago, or whatever it is now, when they started decreasing, when the Bank of Canada started lowering the overnight lending rate and prime started coming down, we thought that, that would be the catalyst. And it never really happened. And I don't know whether tariffs being dropped is going to be that catalyst of like certainty in the economy or anything like that. And, there's still really kind of crazy uncertainty even to do with tariffs, because like, it was taken to the appeals court and it was voted 7-4 in the appeals court in the US that the tariffs are illegal, based on how they were structured by President Trump. He's now taken it to the Supreme Court to leave those tariffs. And that's the tariffs to do with Canada and the US, based on the fact that we have that and the Emergencies Act that he kind of, gave the guise of enforcing them under. So there's still so much uncertainty around that. Like, if it's been deemed twice now as being illegal, now it's going to go to the Supreme Court. How long does that take? Does he want to just wait for that outcome? Or is he going to force an agreement with Canada before then, so he doesn't have a third loss? What does that look like? Again, like, and I don't know whether that's going to be a catalyst or not of like drop, for tariffs being dropped. Like, is that going to impact the general population? Like those first-time home buyers, do they actually like care or even understand? Like, no, and I don't mean to demean of like say understand, but like, are they even paying attention or think that is that the reason why they're staying out of the market? If that's, kind of thing. I think really at the end of the day, everyone just inherently wants a deal. And first-time home buyers especially look at the purchase price and go, holy shit, like that's expensive. I want to get the best deal possible to save money. And they just kind of wait too long and time themselves out because, it goes the other way, or, things hold steady and they're not, again, just going into it with the proper mindset of like buying when the right time for them is to buy.
Yeah. And also worth noting that the 15th of September, 2 days before the Bank of Canada's announcement, the House of Commons will reconvene after their 2.5-month summer break. So 15th of September is when they're back in session.
And maybe there's a budget then. Like, we still don't have a budget that's been tabled yet. Like, the election was in March and we still don't have a budget of what the government's going to be spending on, which all indications and what's being spent right now is more than the previous administration of, so is that going to increase, and is that going to skyrocket from a spending perspective? What is their focus going to be? Are there going to be new incentives for first-time home buyers that they're going to release? I know they obviously changed some stuff with CMHC and 30-year amortization and things like that. But is there going to be more in that budget when they do sit, when they go back September 15th? What is that? What is that going to entail? What is that going to look like? Is there going to be anything in there that's going to spur home buyers or first time home buyers to jump into the market? Like, who knows? And I do hope that there are some things in there. I hope some of the ideas that are floating around are in that budget, like waiving land transfer tax for first time home buyers, or increasing that rebate, or things like that. But again, time will tell, and who really knows, and whether they're just going to be artificially stimulating the economy. And how is that going to affect the Bank of Canada's decisions as well?
Yeah, and even that land transfer tax credit, like if you remember, we were both already in the industry when that came out, and it was on the first, 368,000 home. At that time, that was most first-time buyers, that would pretty much cover all of their land transfer tax, because most homes at that time were, 300, 350, 400 even. Now it basically, the average home between 500 and 750, like it's barely covering, like it only covers half of their land transfer tax credit essentially. So I think that's an easy one that they could introduce. But to your point, CMHC, speaking of CMHC, article, CMHC reports surge in mortgage insurance demand. So here's a quick summary. It says, a Canada Mortgage and Housing Corporation, CMHC, reported a significant 28% year-over-year increase in homeowner mortgage insurance in the first half of 2025. The number of insured homeowner units jumped from 22,038 to 28,132 in the 6 months ending June 30th. This surge was driven by two main factors: lower interest rates making borrowing more attractive, and the recent policy change allowing 30-year amortizations on insured mortgages, which has expanded affordability for many buyers. Kind of speaking to exactly what you just mentioned. Interestingly, while mortgage insurance activity has climbed, the broader housing market shows signs of cooling. National home prices and sales both fell by about 2% over the same period, suggesting that affordability challenges are still weighing on the market despite more favorable borrowing conditions. On the multi-unit side, demand for mortgage insurance remains steady. Meanwhile, mortgage arrears stayed at just 0.30%, a historically low level that reflects ongoing household resilience, which is also kind of wild, all things considered. This dynamic suggests a market where borrowers are eager to stretch affordability with new policy tools, even as home prices soften slightly. It also raises questions about whether longer amortizations are a sustainable solution or a temporary relief valve. So, very interesting. I mean, I still remember the old, 40-year amortization, 0% down payment, which was, 20 years ago now. But these are levers that they can pull if needed. Like, they could extend to 35, they could change. I don't think changing the down payment is good. I think 5% is low enough, or, scaling. But do you think the rise in mortgage insurance applications, do you think that shows that Canadians are becoming more optimistic about affordability, or is that they're just simply more stretched? Like, it's just because of exactly what it says, like lower rates. Oh, I can get 30 years. Well, let's do that. Not kind of realizing the negative impact.
Yeah, I think I think there needs to be more information that CMHC is providing in this report, or at least like that the article isn't highlighting. And what I mean by that is, yes, there's probably more demand, but the demand is now that for over $1 million purchase price, you've got, like, they increased that threshold to 1.5. So there's a lot, there is that subset in the Toronto and Vancouver markets where they were never able to use mortgage default insurance because every single property was over $1 million. For, the average price in Toronto is for a single family home is still over $1 million as an average. So they were never able to use mortgage default insurance in those major markets, which make up a huge portion of the sales within Canada. So when you are increasing that upper limit for what they can, get with insurance, like less than 20% down, that's obviously going to, kind of drive demand, if you will, in it. But that's because they've expanded to these major markets that are now able to finally take advantage of it. So, so I think that's what's likely driving that increased demand. Again, like, at least I didn't see in that article of it kind of specifying how many how much of that demand is now an increase in the Toronto and Vancouver or the GTA, Golden Horseshoe region and the Vancouver area, where what were the numbers before that change and what are the numbers after that change of usability? Because anyone I talk to in those markets, mortgage agents, realtors, like everyone is having to buy with 20% down previously until they made that change. So for sure, it's going to drive demand.
Yeah. Something worth noting too, and I explain this to all clients that are asking about 30 years, the difference between a 25 and 30-year amortization, it's a massive uptick in interest you pay in that first 5 years when you go 30 versus 25. So if you can do 25, I would suggest it. But if 30 is the only way you can get into that dream home, it's an option,
Mm-hmm.
Dave, how do you feel about sliding into some mood boosts? Are we at that time or?
Boost my mood.
All right.
Boost my mood.
I'm going to go with 4 today, just because we've been off for a few weeks here. Maybe 5. I'll see how I'm feeling. Number 1, why don't ants get sick? They have antibodies. Very anti. Number 2, I'm terrified of elevators. You know this. So I'm going to start taking steps to avoid them. Number 3, how do billboards talk? Sign language. And I'm going to end on this one because it's my favorite, I think. Did you hear about the T-Rex who sells guns? He's a small arms dealer.
I like that one. That one's good.
Thank you, everyone, for listening. We're happy to be back. We'll be back next week, every Wednesday, 10 a.m., new episodes. Be sure to follow us on our socials. And we just want to say a quick shout out again to our sponsors, Gertin Poirier, Avocat Lawyers, Big Insurance in Westboro, and Centum. And we got an exciting new partnership coming in the next couple of weeks. We'll unveil it then, but it's exciting. It's exciting.
At least for us.
At least for us. And for everyone listening. You're gonna have some chances. You're gonna have some chances to win. But thank you everyone for tuning in. We'll see you soon and have a great week.
Deuces.